Telltale signs you should have run away from Celsius Network. Do you know which company had $8 billion in loans given out to its customers, $12 billion in assets under management, and 1.7 million customers, but still went bust? It's Celsius Network. Celsius Network touted itself as a crypto bank and just declared bankruptcy in June of 2022. If you are hearing this name for the first time, then check out our previous video where I shared the story of this company called Celsius Network. Hello, my fellow value investors. If you are seeing this channel for the first time, then welcome. My name is Ali and this is the channel where we discuss all things investing. This is The Market Talk. In our previous video, we had a quick look at the billion-dollar company that just declared bankruptcy.
I declare bankruptcy!
And sent shockwaves in the crypto and blockchain world. This company is Celsius Network. As of October 2022, it is undergoing bankruptcy procedures. In this video, I thought we should do something different. We are going to examine some telltale signs that should have spooked us away from giving our money to this company. So, what are the telltale signs that should have warned us against it? Telltale sign number 1, the promise of 17% in returns. At one point, Celsius was brazenly announcing that for some of the crypto deposited with them, they would return 17% yield. 17% confirmed returns is a crazy amount. That 17% should have just scared you away from investing in Celsius. I mean, think about it. If Celsius gives you 17%, it must find a way to make more than 17% so that it can earn a profit. What investments are out there that give you more than 17% returns steadily, year after year? I mean, the closest thing that I can think of is credit card companies that earn 16%. Anything more than 17% returns are all very risky investments. So, the first telltale sign is the company was offering 17% yields. They just sound desperate for your money. Telltale sign number 2. Cryptocurrency itself is a telltale sign. Till date, if we were to compare the non-riskiness of assets like property or gold, you will find that it has stood up against the test of time and has proved to be a valuable form of assets. By the way, test of time, I'm talking like thousands of years. However, risky crypto hasn't even been around for 50 years. Not even one generation, and it has gone up and down like crazy. Imagine the risk in investing in Bitcoin. It was $1 to one coin once upon a time, and at its peak, even went up to 60,000 USD for one coin, turning some people into millionaires. But now it has dropped to 20-something thousand. That's a very risky and volatile investment. And to ask someone to make money from this amount of riskiness is even more risky. Have I said risky enough? Telltale sign number 3. An improper explanation of how Celsius even earns money. Time after time, Alex, one of the founders, has appeared on TV, YouTube videos, podcasts, and other platforms. And he has constantly repeated the same thing, that we loan crypto money to institutional banks and banks pays us fees and we give those fees back to our customers. But which banks loaned from Celsius? How much did they loan? At what interest rate? And was the loan secured? So many questions have gone unanswered. This part would have required that the depositors do some digging, which any normal human being would not have. It took multiple finance journalists to get the scoop on Celsius, and that too after the company declared bankruptcy. Knowing precisely what a company does to make money and how it makes money should be the first prerogative of each investor. So, without having confidence in a company, how can you part with your money, even if the money is crypto? Telltale sign number 4. Celsius was paying back its depositors the promised yields, not with money, but with cell coins. Did you know that Celsius was not only a bank for crypto, but they had also created their own coins called cells and were urging people to mine cells. But, and this is crazy, not only were they asking people to mine cells, they were also convincing people to earn their yields by getting their money back in cell coins. So, if you deposited, say, 1 Bitcoin and you were supposed to get back 17%, which let's assume is $7,000, then instead of getting back 7K, you would have gotten, say, 800 cell coins. Now, cell coins do not equate to real money. The coins were made up. Giving you something unsecured and super risky instead of money would have been a huge telltale sign to not invest or deposit your money with Celsius. And my last telltale sign is that Celsius is not even a public entity. Public companies would have to at least open its books and prove that it has profits. Celsius was a private company, and I dare say it was just a startup. They had just recently closed one round of funding in 2021. So, without its books even having scrutinized by the authorities or other proper financial auditors, how can you know that Celsius is doing exactly what they say they are doing? So, as you can see, the writing was already on the wall. I wouldn't have put $10 into this company, let alone deposit all of my crypto in there. All the 1.7 million customers who now have their accounts frozen can see little hope of getting their coins back. Man, I feel for you. In a personal story, I too have lost money when a company declared bankruptcy in Singapore. I lost a whopping $49 when O-Bike decided to file bankruptcy and took all of my deposit money. The company recorded 1 million in revenue but had 4.25 million in losses. It is my fault I did not research enough in that company. Well, at least I'm smart enough to have escaped Celsius.